Well, howdy there folks, and welcome into today's video. Hope you guys are doing great out there as always. So I released a video, I think it was yesterday, and I teased in that video, like, if you guys were interested in kind of, you know, me maybe telegraphing some of my future moves here, and just some of the stocks I'm looking at buying and things like that. And I definitely saw a lot of comments that you guys wanted a video like that, so I said, let's go ahead and do that here today, okay? All I ask in return is that you guys smash that like button, and that's literally it, guys. And we're going to get into this and why I'm, going to buy these particular stocks, why I'm looking at these stocks, and things like that, okay? Now, what we're looking at here today is the public account and what stocks I'm thinking about buying in that specific account there. And this is an account we started about, got this up and rolling about 4 years ago now. And obviously the last 2 years has really been, a rapid rise, right? We had obviously the Rona crash, and then coming out of that, it went beast mode, and definitely Tesla's to thank for a lot of that, and there's a lot of other stocks to thank for that as well. And as far as the returns over time for this account, things like that. So year-to-date return, we're underperforming the S&P 500. Now, I don't ever trip on underperformance in the short term. The reason being is, at the end of the day, it's like, are you making way more money over the long term, right? On a 3-year, Fidelity Investments has us at a cumulative return of 297%, right? And that's versus S&P 500 at 64%. The Dow Jones U.S. Total Stock Market Index is at 63. And obviously the bonds, I don't even want to compare myself against bonds, 17%, 16%, right? I'm always going to compare against kind of the S&P 500. And obviously we're destroying the market, and that's what I want to do. 3 years, 5 years. Obviously we don't have a 5-year up yet because that count's not old enough to even be 5 years yet. But as long as these numbers over here are decimating the market, that's what I care about. That's why I put in all this work to, research stocks and do those sorts of things. By the way, you can do that on the Hungry Bowl. A lot of research, the financials tab, getting more and more built out over the coming weeks. You guys will see that, as well as the ability to see SEC reports, the 10Ks, 10Qs, listen to conference calls. It's on your iOS store and your Android store now, absolutely free to use. So, that's why I put in all this work to decimate the markets, and that's what I love to do. So, short term, I don't trip off that if we're outperforming or underperforming in the short term. It is what it is, okay? So let's get into this, guys. So as far as the actual public account here, before we get into new positions, as far as like new stocks I'm thinking about buying and whatnot, am I planning on buying any of these stocks more heavily in this particular, here, right, that I already own? Well, Tesla, I'm not looking to add any more Tesla shares. I did put out a really detailed Tesla video today, so if you're interested in Tesla stock after this video is over, you might want to check out that Tesla video. That's a beast. It was like a 30-minute whiteboard video going into projections, bull and bear thesis around Tesla, things like that, okay? But in regards to Tesla, I'm actually not interested in buying more shares in this account. I mean, the fact is, it's a $1.6, almost $1.7 million account, and over $500,000 of those dollars is in Tesla, right? So roughly 30%-ish is in Tesla stock. That's a significantly big position. Kathy Wood, 30% of the main ARK fund is not even in or remotely close to in Tesla stock, right? It's like 10% or whatever. So for me, in this particular portfolio, it's a huge percentage. So I'm good with what I have as far as Tesla in this one. I feel comfortable. I don't feel like I need to buy any there. Tattoo Chef, definitely willing to buy more of this stock. Now, I am up 7% on it already. And in this particular account, we're up over $17,000 already. But at the end of the day, like Tattoo Chef, I think just has so much long-term upside that despite being up 7%, I kind of honestly want to average up on the position. So, and obviously, if the stock went down in any meaningful way in the short term, I would gladly pick up shares. The long-term shareholder base has really started to form around the stock over the last 6 months, and you can just see it kind of in the price action of the stock. Like, it bounced off 16, and then right away it was up, and it just, it holds strong now, it seems, in the 19 range. Not to say it can't go back down in the short term, one day sell off or something like that. Those things are always possible. And I'll be there to buy the shares, just flat out. And so if anything, I'm interested in averaging up. So this is a stock I'm actually interested in buying some more shares. Not a ton more shares, right? Because it's already 239,000. That's over 10% of the portfolio, right? Well over 10% of the portfolio is in Tattoo Chef. So, I want to add more shares, but I can't go too crazy. This dog right here, oh boy. Corsair Gaming, I got to add some more shares of this one. I would love to get the position sizing somewhere right around where Tattoo Chef's at right now, right? Tattoo Chef's at 239,000. I would not mind at all if I got, by the end of this year, I would like to get this, to somewhere around here, right? So Corsair Gaming, absolutely. I need to buy more of that stock. I'm slacking on buying Corsair. I need to buy more because eventually, in my opinion, Corsair is going to go on a crazy run. And when it does, that baby's not coming back. And so, I don't want to be stuck in a situation where I'm like, oh man, I had all that time to buy Corsair and I was just, I was taking my sweet little time. No, I got to get rolling with that one. Revolve. So, not interested in buying Revolve. Obviously, the stock has done tremendous for us. We're up $135,000 in profits, almost $136,000, and we only put $28,000 into it. It's been just a beast, but I'm not interested in buying more. I'm just a happy holder of the stock right now. Facebook, 123%. Not interested in buying more Facebook unless it hits something with a 200 in front of it, right? 290, 280, something like that. That would really make me say, okay, I'll average up on Facebook. Facebook, I've held this stock for many years in this portfolio. This is probably one of the first stocks I ever bought, if not the first stock I ever bought in the public account. So we're doing obviously very, very well on it. It's definitely not our best performer, but the risk in Facebook is very, very low in my opinion for a long-term shareholder like myself. Skyworks Solutions also one of those positions that was a very, very early days position, 128% gain. Not interested in buying this one either. Skyworks is benefiting from the 5G movement in a massive way and will continue to for years and years to go in the future, but not interested in adding more shares there. Dropbox, not interested in adding more shares there. Stock's done tremendous for us. We're up 28,000 on this, and I've already taken, I think, $20,000 or $30,000 worth of profits out of Dropbox, just like in the past couple months. But as far as adding more shares now, I just like being a holder of that stock. Planet 13, the Planet. I should be adding this one. Honestly, there's some really good news came out today in regards to the Jack Jackson stocks and around banking and banks not having to face penalties now for essentially lending money to stocks that compete in the space. And it also opens up the path toward federal legalization in a much bigger way, in my opinion. Federal legalization, like I've said, I believe is coming. I don't know what year it comes. I don't know if it's this year, next year, the year after, but I believe it's in the next few years. Federal legalization is coming for this industry. It's going to be a massive boom, and a Planet, it's going to just open up the whole United States in a massive way for the Planet overnight and make things so much easier for them than ever before, okay? So the Planet, I should be adding, honestly, more shares in that one. Upwork, not interested in adding more shares in Upwork. I just like to hold this stock. We're up $31,000 on it, a 283% gain. Freelancing economy company, it's done really well for us, but I'm not interested in buying more. Honest Company, believe it or not, despite being up 18% on this stock in this particular portfolio, right? 923 is our cost basis. I'm interested in averaging up and buying more shares of Honest Company in this particular portfolio. I would love this to be a six-figure position somewhere up here, right? I would love to get that stock. I feel so safe in that stock over the coming years, and I think it has massive upside over the coming years that, I just think the position's way too small, and I do not mind averaging up on this position. My hope is the stock goes back down in the short term, and I get to buy shares for a lot cheaper. However, if that doesn't happen, I need to build this position into a six-figure plus position. Like I said, downside I think is so limited in the stock. Upside's massive, so I need to buy more, okay? Avant Brands, I need to buy more, not a ton more, maybe another 10,000 or 11,000 shares of the stock, but I can't go too big in this one. Super, super speculative company, huge upside, huge downside. Although I will say the downside is starting to get limited now that the stock has fallen so much. When you look at the capital position of this company and the growth they've had, the risk reward is probably the most attractive I've seen it, maybe since I got in this stock actually, right? because now they're in just a much better financial position. And yeah, we'll see obviously what happens over time there. But yeah, I should add more shares in that one. I just can't go too big because it is obviously a spec stock. Elf Beauty, 297% gainer on this one. Not interested in buying more shares. If anything, I'm interested in potentially selling. I kind of don't want to sell. I just love holding some Elf shares. And you know, and the other thing is obviously it would be long-term capital gains because I've owned the stock for a long time. But man, I don't know. It's just very, very hard for me to sell out of this last 1,000 shares of Elf Beauty. So Cruisy Doozy, 139% gainer there. I really like Cruise. It's in no man's land. Not interested in buying more of that stock. If it went down to something with a 7 in front of it might be a different scenario, okay? So that covers as far as what I'm looking to buy as far as stocks I currently hold. Now, what are some new stocks that I'm potentially looking to add in this particular portfolio that I don't own right now in this particular portfolio? Well, Smile Direct Club, SDC, first one up here. So obviously Smile Direct Club, I bought some in my main private account and doing pretty well on those ones already. Smile Direct Club fell 3% today. Yeah, I would not mind buying, shares in the public account and building this into, a $30,000, $50,000 type position. Could I build into a $100,000 position in the public account? Maybe, but I think it's more appropriate of like a $30,000, $50,000 type, position in that particular portfolio. I mean, the business, if you just think about it like logically for a second, right? Like dental care has been kind of pushed to the back burner for the last, year or two, ever since Rona, right? And obviously as masks go away over time, over the next year, they've already started going away in some places, but they'll go away a lot more over the next year or two. As that goes away, people, pay more attention to their teeth, dental care, things like that. It all benefits Smile Direct Club in a massive, massive way. And the company's in a better position than they've ever been in my opinion, in terms of their strategy, their teledentistry program, and all those sorts of things. Like, I think the company's just in a really good position. The margins are crazy on the actual product they sell, right? They've spent tons of money advertising over time. I think, now that the company could potentially lay off on a lot of advertising, at least in the United States. I think most people know a Smile Direct Club now, and they spend so much money up front that I think they'll reap the reward of spending all that money up front over the last 5 years. I think they're going to reap those rewards over the coming years where they'll actually be able to dial back advertising spend, and this company's profitability will increase in a massive way. So a year ago, 71-cent loss, expected to bring that down to 67 cents. Maybe they do a little bit better than that. And then next year down to 31 cents. So obviously those are the type of trends you want to see. Smile Direct Club's a little bit of an early stock for me to get in when it comes to a company that is still a little bit away from profitability. Like maybe they're more toward 2 or 3 years. Usually I'd like to get into an unprofitable company if I'm getting in one, right? I like to get into it about a year before they flip that switch over to profitability, kind of like Tesla. Tesla was a little more toward 2 years. So this one, I'm about 2 years out, in my opinion, of the company turning profitable. But I think that the stock's gotten so low now that it's just at a position where I can't ignore it, right? As far as current year, 15+% revenue growth expected, over 20% revenue growth expected next year. Over 12 analysts cover this stock, and they should reach $1 billion in revenue either next year or the year after, depending on how much they scale this business. They obviously went into France recently, and that's a huge, potential market for them. And just international expansion in general is a huge opportunity for this company. I feel like they really dialed in their process of business and making it attractive for dental offices to be interested in offering Smile Direct Club, and Smile Direct Club bringing potentially a lot more patients to these offices and giving Smile Direct Club an opportunity where in the past it might have just been Invisalign, okay? So yeah, Smile Direct Club, it feels like the type of stock I should own in that portfolio, and because it's such a beaten down dog, I think it's just I got to add, sooner rather than later, because eventually I think the stock's going to go on a big run to $10, $15, $20 again. And I don't want to have, stayed on the sideline in that particular portfolio. Like I said, I own in another account a decent amount, but I would love to own in the public account there, okay? Next one up here. So this one's a tough one for me. Wynn Resorts, at $80, usually it's an easy buy for me. The one issue with Wynn Resorts right now is Macau and China in general. A lot of distrust, so much going on in Macau. It seems like every day they're doing something anti, the gaming industry, or something that makes you say, oh gosh, what are they doing now? That's how it feels right now. And so that makes it a tough buy for me. I do own Win shares in my main private account, but I obviously don't own any in the public account. So the way I'm thinking about this is under 80, I think I got to get at least a position built out, because the thing is, with the Macau properties, they could always, sell those off if the government in Macau let's say they acted super impractical, right? They could sell it off to a Chinese company or something like that, which I would not like that. I think that would still be bad overall for the company. However, it could generate the company, obviously, massive amounts of money. Also, keep in mind the way Win structured the company over time is where the debt from Macau is not, can't be like recourse over to the parent company. Some food for thought there, so that gives me a little security. And also, I still think the higher probability is, Win's going to continue to get their gaming licenses and their concessions and things like that, and it's going to be fine there. But you don't really know, right? Like it's not for sure. And with the way China's been acting, it's a little scary, right? And you're seeing things like I was just reading today a couple things. One was they're now putting the time has to be posted on all slot machines. There's something where they want to overlook all dividends paid out of any Macau operations on a high level. And it's just like every day it seems like the Macau or China in general is just putting this like pressure. And this is the craziest thing, it's during a time when Macau's not putting up great numbers. Like there's been times in the past where Macau is, doing tremendous volume, right? And just crazy, the craziest of the crazy numbers. It's not going on right now for Macau. Like it's a horrible market right now. It's probably the worst tourist market you want to compete in at the moment, right? And yet they're doing all this during the worst time. It's just, that's what's frustrating about the situation. Literally, if Macau and China in general could just be a little more trustworthy, I would be easily buying the stock right now. So, but I am absolutely considering buying some shares in the public account. Obviously, the Rona year was devastating for the stock. Now expected to obviously still lose money this year, but not nearly as much. Next year, expect to get back to profitability. Let's hope everything goes well in China and Macau and things get back on the right track there. Las Vegas properties and the Boston properties, if you're seeing numbers out there, it looks great. Just flat out, about the best you've ever seen it. So that's good news. It's just the Macau situation is still bad, right? Current year, company is expected to have 87% revenue growth. Next year, company is expected to have 48% revenue growth. A lot of that is honestly going to depend on the Macau region and how fast things ramp back up there or don't ramp back up, and how anti these companies, China is or Macau is in general. So yeah, definitely one I'm strongly considering adding in that portfolio. Another one up here is Voyager Digital. So Voyager Digital, I own the stock in my main private account, kind of like I do Win, but I don't own any shares in the public account. And when I look at Voyager Digital, I feel like this is it's somewhat of a simple story, okay? So when it comes to Voyager, you got to ask yourself, are you bullish or do you think crypto is going to be a much bigger thing in 5 years from now than it is today? Or do you think crypto's best days are right now? Now, if you think crypto's best days were here in 2021 and Bitcoin topped out and that's it, and all these things are going down and down and down, then obviously Voyager is not even a stock that can be considered, okay? I don't personally own any direct Bitcoin or any cryptos right now outside of VGX. So when it comes to me personally, I don't have almost any exposure to crypto. So if I want to get some exposure to crypto, I would much rather get it through Voyager, because Voyager wants to become more than a crypto brokerage over time. They want to become also a stock brokerage. They've said this. They've gone on record. The CEO's gone on record. They want to become, an overall banking company, debit cards, credit cards, even bank accounts, things like that. Ways you can convert crypto into cash and cash into crypto and buy stocks with a crypto, or trade out of a stock into a crypto easily, things like that. Next level stuff that honestly most traditional banks just aren't ready for it, right? And so I think it's a really high risk, high reward play. And when I say high reward play, I'm talking about like, this is, if they can execute the type of stuff they're talking about, this is a 30, 50, $100 billion plus company in coming years. And it's like under $2 billion market cap, right? So now the risk is they can execute. And the other risk is crypto's at its peak in 2021. And if that's true, Voyager's devastated, right? Could be a $5 stock, $3 stock, whatever like that, right? So yeah, my play here is I don't want to put too much capital into it, but I feel like I should add this, this one in that account, maybe $30,000 or $40,000 worth in this, in obviously the public account here. So if you look at revenue growth for this company, the number speaks for itself, okay? Next year, this is something very important. There's 8 analysts that cover the stock, right? Companies expect to have 217% revenue growth. It's hard to find companies that have revenue estimates of 100% plus, right? Never mind 200% plus, but let's just say 100% plus, and their stocks are at near 52-week lows. Voyager's, really dang close to 52-week low. And, certainly the lowest it's been at any point this year. And yet you look at the growth for this company and then look at the expected profitability. If that comes true, the stock's trading at a forward P of 10. At 10. Are you flipping my flapjacks? Actually, I think that's less than 10. You'll be flipping my flapjacks. A forward P less than 10 with 200% growth. This goes to show you that, I think Wall Street and the stock market is saying, we believe that crypto's best days are right now, and everything's going to get a lot worse over the coming years. If that's true, once again, Voyager's in a really tough spot, and they better diversify their business quick. If that's not true, and everything's up and up, and crypto becomes what a lot of folks think it can become, Voyager has, this stock is set up to go up in fashion like we probably haven't seen outside of maybe Tesla stock from 2019 to 2021, right? So some food for thought there. Like this one could explode from $1 billion to $10 billion market cap in a snap of fingers if everything plays out and there's more faith there and there's more consistency, like straight up look at the numbers, like, you know what I mean? Like a stock like this, if they can actually put up 200% revenue growth, the stock should be trading at a forward P of 100 plus, if that's the scenario, right? Not at a forward P of under 10. That's just insane, okay? So yeah, a little food for thought there, okay? Last one up here, Dutch Bros. Dutch Bros is a stock I'm looking at. It went up like crazy on the IPO. I love the business model. I love the company. I love the structure. By the way, I don't think that market cap's correct there. I'm hoping the stock falls a bunch. If it falls a bunch, which a lot of these IPO stocks at high fly, then they fall a bunch. I'm hoping it does. If it does, highly probable this is a stock I buy and maybe even buy a 6-figure position in. It's been too beastie. That's what I'll say about that one. So hope you guys enjoyed today's video. As always, don't forget to download the Hungry Bowl app that is on your iOS and Android app store now. And then outside of that, guys, what the heck? Holy smokes. Why did this guy get so big? Hey, chill, dude. You got too big. Well, anyways, we're just going to end the video. Much love as always. Join us at Stock Hub. It's free. Send me any stock market questions, pin comment. Thank you. Bye.